All right, today we're pulling back the curtain on something, well, something a little sinister in the stock market. We're going to dive deep into what's called the operator game, and how that stock you thought was a sure thing might have been nothing more than a trap.
You've probably been there, or you know someone who has. You see a stock that's just on fire. It's going up and up, so you jump in, right? You're excited. And then, almost immediately, it plummets, taking your hard-earned money right along with it. It is so frustrating. But here's the thing. What if it wasn't just bad luck?
Yeah, you heard that right. That sudden, gut-wrenching crash probably wasn't the market just being the market. There's a very real chance you were carefully and cleverly lured into a trap set by people who are experts at playing with both the market and our emotions.
So, to understand the trap, you have to understand the person setting it. Let's meet the villain of our story, the stock market operator.
So who are these operators, really? Think of them as puppeteers. They can be one person or a whole group, and they have two big things on their side: massive amounts of cash and, a lot of the time, insider information. They operate in the shadows, and they love to target smaller companies where their huge piles of money can really move the price around.
And this right here, this shows you everything. It's a tale of two completely different goals. You, the retail investor, you're in it for the long haul, right? You want to build wealth over time. The operator, they couldn't care less about the company's long-term value. They're playing an entirely different game, a short-term game of price manipulation. And their entire strategy depends on one thing: trapping you. So how do they actually do it? Well, it's not random. It's a system, a disciplined and repeatable process. Every single one of these manipulations follows a predictable four-stage cycle. Let's break it down.
Okay, here we go. Accumulation, pump, distribution, and dump. This is the classic playbook. Once you learn to recognize these four stages, believe me, you'll start to see the market in a whole new light.
It all starts in complete silence. The operator picks a stock that's flying under everyone's radar. The price is flat, there's no news, it's just boring. And while everyone else is ignoring it, they are slowly and quietly buying up a massive position without causing any sudden jumps in the price.
Now, once they've got all the shares they want, it's showtime. The pump begins. All of a sudden, this boring little stock is the hottest thing you've ever seen. You'll start seeing fake news stories, hearing rumors about some huge new deal, and a complete storm of social media hype. They literally manufacture a story to get you excited.
And this is exactly the kind of bait they use. You've seen posts like this all over the place, right? In Telegram groups, on Twitter, on message boards. It's all designed to trigger your FOMO, your fear of missing out, and create an absolute buying frenzy.
So as the hype builds, retail traders just like you rush in, and all that buying pushes the stock price higher and higher. This is the moment the operator was waiting for. While you're excitedly buying in, they're on the other side of the trade quietly selling or distributing their huge stack of shares to you at that new inflated price.
And then, once the operator has sold off most of their shares, they just pull the plug. The hype disappears, the buying pressure vanishes, and the stock price completely collapses. The retail investors who bought at the top, they're left holding the bag, panic selling at a massive loss. Meanwhile, the operator, they've already walked away with millions.
Okay, so you know the playbook now, but how do you spot it happening in real time? That's the real skill. Luckily, these operations aren't perfect. They leave clues behind. So let's talk about the red flags you absolutely need to be watching for. And let me be clear, this isn't just theory. Just look at the case of Sadhna Broadcast back in 2022. It was a textbook pump and dump. Influencers were pushing the stock with all these false promises. The price shot up over 300% before it crashed, completely wiping out investors. This stuff happens all the time.
This checklist right here is your practical guide. So let's zoom in on a couple of these. Unusual volume surges in low-float stocks. A low-float stock just means there are fewer shares out there for the public to trade, which makes it way easier for an operator to manipulate the price. So if you see a huge volume spike out of nowhere, that could be the operator creating fake activity. Here's another giant red flag: no institutional ownership. That means the big professional investment funds, the ones with entire research teams, are staying far, far away. If they don't see any value, you have to ask yourself why you do. You combine that with a sudden flood of anonymous social media tips, that should be screaming trap, not opportunity.
So this is the most crucial part. How do you protect yourself? You can't stop operators from playing their game, but you can absolutely choose not to be a pawn in it. Let's outline your defense plan.
Your best defense isn't some secret tip, it's just plain discipline. Operators prey on our emotions, greed, and fear. But by sticking to a system, investing in solid companies, tracking their actual results, and managing your risk with tools like a stop loss, you basically become invisible to them. They thrive on chaos. You can thrive on order.
And this is the single most important thing to remember. An operator's power is temporary. They can create a fake reality around a stock's price for a little while, but they can't fake a company's fundamental worth. So the question you always have to ask yourself is simple. Am I investing in the price or am I investing in the value?